Hello, and welcome to this month's episode of the Whisky Investment Podcast with VCL Vintners. It's a new year, and we're super excited to have both Ben Lancaster, owner here at VCL, and Tommy Major, head cask broker. Guys, welcome to the podcast.
How you doing?
Yeah, fantastic. Great to have you here. So we're going to take a little look back on 2024 and look ahead to what we expect is potentially going to be happening this year. But for those out there who haven't had a chance to maybe meet you either through the podcast, listening to those, or through working with VCL, before, do you want to do a little intro, Ben?
Yeah, well, hopefully people are familiar with me.
I hope so.
Yeah. But yeah, I'm an owner of VCL, and obviously I'm alongside Tom in a moment. So essentially, whilst I own the company, Tom and I both deal with clients. Mm-hmm. So there's a bit of a bridge over in terms of our approach to the company. So I think today I'll focus more on the investment side of things and the portfolios that I manage.
Absolutely. And Tommy?
Hi, yeah, I'm head cask trader for VCL Vintners. So the base of my job is managing our existing clients and helping them grow their portfolios in a variety of different ways.
Yeah.
Trying to find value for them in casks, which can become a difficult task at times, especially in the climate that we're kind of sitting in at the moment, along with Ben and Stuart.
Yeah.
But yeah, it's ultimately about getting our clients to the next level, continue to grow, continue to build the portfolio under management that we have that currently sits at around 150 million year on year. If we can see that number continue to rise,
that's your main.
We're moving in the right direction.
Yeah, absolutely. And Ben, well, both Ben and Tommy, we're going to be looking back, as I said, on kind of what's happened, what is to come. But maybe starting off, Ben, could you maybe give a little insight to our listeners in some of the changes, I suppose, you saw across the cask investment landscape over 2024? Or is there anything that comes to mind, really, of that?
Yeah, there's a few things. I said, I mean, if I think of it purely from investment, not VCL as a company, I think that there's optics have changed in the market, right? And I think that's probably a knock-on effect of the global outlook generally. You know, we 2024 was politically quite a lot of upheaval, I guess. You know, UK elections, American elections, pretty much every Western power or Western political power had an election at some stage during 24. So it's the knock-on effect from that, from an investment perspective, was that I guess money wasn't as freely used.
Okay.
You find that when you've got that type of political unrest, people there's two options. You can either be proactive or you can be reactive. And I think there was a sentiment there that whilst cash was available, because of that level of uncertainty, there wasn't much movement with it. And I think towards the tail end of the year, once those elections started to happen, you found that there was more investment. There was more bullishness in terms of utilising that money rather than sitting there and waiting to see what happened. Once they knew what happened, there was more of a sort of an affirmative action in terms of investing and moving funds towards whiskey. Yeah,
a little bit more confidence, I suppose, which is understandable, because if you have no idea who the government is going to be, what they might do.
Yeah, exactly that. And
understandable, people would be a bit...
You know, broadly from a UK perspective, just that alone, you know, like from Scotch, you've got a new government, you've got new taxation potentially, which obviously we saw in the budget. You've got, you know, export markets that rely upon tariffs and also trade agreements, which a new government had to negotiate, not the former government. So there was a lot of that came into play. So, you know, from a trade perspective and an industry perspective, there was a lot of changes that could have happened and did happen. And then from an investment sentiment, you know, because of those knock-ons and those changes, you get a reaction. So I think, you know, that it was just 24 was just a different type of year. You know, if you look at COVID, for instance, when that was occurring, you know, there was an approach and a sentiment where people wanted to move money because of whatever else was happening. Whereas with this year, it's been a bit more considered in terms of where the allocation of capital goes. And as you said, confidence grew as those political circumstances changed.
Yeah. Tommy, anything else you've seen kind of throughout that you saw in 2024 that really kind of stood out in terms of those changes to how people look at cask investments?
I think the uncertainty that we kind of witnessed in 2024, anything surrounding political uncertainty creates fear, right, within the population. And two things tend to happen. You either kind of get an investor that sits on their hands and they tend to not move
Yeah.
because they want to know the outcomes of absolutely everything before they're willing to make a decision.
Yeah.
And then you get a certain type of investor who's willing to listen and kind of look back over previous years or previous downfalls or turbulent times and look at how the whiskey market has performed throughout those periods of times and how it's weathered those storms, and then make a decision based on those facts that are in place. So for us as a company, and certainly for me, and I'm sure Ben comes across the same kind of issue with his clients, it's about talking to our clients as much as possible, giving them as much information as we can, so they're in a position of knowledge and they can make a decision based on those facts that we're providing them with. If they're not looking into the market and we're not contacting them, they're never going to be in a position to be able to make that decision. So that was quite a challenging thing, because you're in a position where you need to keep these clients updated as often as possible, whether that's through a telephone call from myself, one of our juniors, Ben, or it's through email, whether we're sending them out newsletters, but it's to kind of stay in regular contact. But I think whenever you're talking about political turmoil, it's always a time where people become nervous about things that they have no reason to be nervous about. Right?
Yeah, exactly. Yeah.
Because an area over here isn't performing, and all of a sudden then start looking at every area of their life.
Yeah.
People worry about walking to the shop. I think it's like. So that's always a challenge, but we're in a great position as a company. The whiskey sector as a whole is in a fantastic position. So as much as it can be a challenge for us, it can almost be flipped on its head, because it's a real positive, because we work with a market that's proven to weather those kind of periods of time.
Yeah, it's got such a tried and tested history to actually see, look, these things have happened before, just stay steady.
So as long as we work on it and we keep our clients informed, it can actually breed confidence in clients, and it can help clients make really, really wise decisions.
And thinking again, just across 2024, are there any markets? You mentioned there might be a market here or a market there. You're looking, maybe one's underperforming, one's overperforming. Ben, were there any that kind of stood out to you that were of potential interest for Cask investments on that side?
I think it's all, for me, I always go back to Scotch.
Yeah.
I think because of the pedigree the asset has, the track record, and I think what Tommy alluded to is a really important point, is that, the way 24 panned out, there was a lot of opportunities that have come from the back end of it, because you're now seeing there's, with Scotch, there's feast and famine. There's been times where there's been very little liquid available, where you then have to really box clever in terms of allocations you take and what distilleries you can acquire. But then at the other side of that coin, towards the tail end of the year, there was more liquid available, which for our clients, an investment perspective, meant that there was some really good opportunities to get distilleries that maybe they haven't had in their portfolios before, or age statements that weren't available before. So I think for me, Scotch is the reason Scotch is a cornerstone for us of what we offer to clients is because of its stability. The availability may change, but the consistency of the return's always there. And I think that if you look at that more macro, more broadly, ultimately, if you then apply that to any liquid in a cask, whether it's bourbon or Irish whiskey, for instance, the maturation process is where the growth is, and that's what when you're investing into that, you can ride out anything that comes at you. But I just think that we found towards the tail end of that year or last year that there was a lot more sort of stock that was available that wasn't, and that meant we could then pass that on to clients who could then diversify further into the asset. And as we've alluded to already, there was a real shift in approach towards the back end of the year where there was a lot more open-mindedness for that type of diversification. And
I guess once you had that feeling, okay, we've gotten through these uncertain times of the UK, American, as you say, other Western country elections. All right, okay, now we know what we're dealing with, potentially to an extent. Now we can maybe make some more decisions. Tommy, any other areas that you see potential? Obviously, understandably, Scotch is super stable, long history, all of that. But for you, any other markets of interest?
I mean, we've done a lot of business in the tequila sector last year.
Okay, very interesting.
Which has proved very profitable for our clients. It's a market that's difficult to access, but it's an incredibly fast-growing market in the US. The aging process with it is a lot faster than Scotch. So it offers a slightly different dynamic to our clients, where our clients tend to look at Scotch as a long-term investment. the majority of our clients are looking at 10 years plus.
Yeah.
Whereas with tequila, that whole period shortens to around 5 years. And the growth's been fantastic.
Interesting.
And the interest has been high.
Yeah.
We wish we was in a position where we could facilitate more trades in that sector.
Yeah.
But accessing the liquid is really, really difficult because within the tequila world, they can bottle it and sell it on day one. Unlike Scotch, where it needs to be aged for 3 years before it can be legally scotched and bottled. In tequila, they can bottle it without even hitting a barrel.
Yeah.
And because the market's growing at such a fast pace,
they want to get
they're
it
more interested in growing their brand
of course.
than selling it to us. So we get snippets of stock, and all of our allocations within the tequila sector have sold month on month, which is great. And it's great for our clients because it offers them something completely different that they've not seen before. What it also offers is a lot of interest to younger clients, because they're more familiar with tequila. I mean, we've had lots of clients in the latter age brackets that are also very interested, but it just sparks a new interest in something different, something we haven't spoken about before, and the margins are fantastic, and the growth within the sector is continuing to move forward. So that was a really interesting move for us as a company. And it's proved really successful.
And I'm assuming as well, it also helps with that diversification of portfolios, because it allows you to have your hands in a few different pies rather than just having sole focus in one arena, which is more.
Yes, I mean, with Scotch, it's our most stable area, and clients tend to know a lot more about Scotch. They feel more comfortable because it's been around for a lot longer. The history around Scotch is there. The branding is significant. But you're right, it just offers a complete diversification into a different spirit that yet offers all of the same principles that Scotch offers in terms of how it makes money. It ages in a barrel, it matures, and that maturation process, as Ben mentioned, that's the key to what we do. If the market stays flat for the next 10 years, as long as your cask is maturing, then you're in a position where you can see a return. And tequila offers that, so it was a really, really, really good move, and
different.
Hopefully more to come in 2025.
Very exciting. We saw the UK election in July, which shifted up the conversations happening, certainly in the UK market, from a very long time of Tory leadership into the Labour government. Ben, was there anything from a legislative perspective that you're thinking either impacted people at the end of 2024 or you'll be keeping an eye on for 2025?
Trying not to get too political, I guess, in the response. The change of government had a big implication. I think the one disappointing thing was that the first thing that was said was that there was going to be a backing of Scotch to the hilt, and then the budget kind of torpedoed that. But again, I think from an investment standpoint with whiskey and Scotch and assets generally, like Tommy said, that when you've got a cask maturing, whatever happens politically, you can come through the other side of that with an increase in value. So I think that the political landscape in the UK, whilst it's changed, the taxation side of things is more at that end product. It's more once it's in glass rather than in cask. And I think the important thing is that cask as an investment, the taxations remain the same in terms of that wasting asset. There was no deviation from that. So from our investors' perspective, we've maintained the status quo. The appealing elements of this market have still stayed appealing, right? I think that there's been very minimal impact in terms of this market from a change of government here in the UK. Whether that applies to the change of government in the US, time will tell.
Tommy, I was curious to get your thoughts. Obviously, the new Oval Office,
I think
this month coming into play. What are we thinking? What about?
So
the
I
US?
agree with Ben in terms of from a whiskey perspective. It's great. Everything pretty much remains the same, which is fantastic. What we have to also look at is what's going on elsewhere and how that's affecting clients' mindsets. Now, as we know, capital gains tax has jumped at the lower bracket from 10 to 18, at the higher bracket from 20% to 24%. This has an effect on investors' mindsets. So in terms of clients and their pull towards the whiskey sector, it's stronger because whiskey is ring fenced. Classed as a wasting chateau, it's ultimately a tax-free investment. So I think it's a positive in that sense, because people work incredibly hard for a long period of time And I think the feeling that I get when I speak to clients now, I mean, look, you could rise taxes by 1%. And if you raise tax by 1%, people are going to be unhappy. But at the moment, it's becoming pretty strong, and people are feeling the effects of it. People that have worked incredibly hard and have built up some capital to be able to live the rest of their life comfortably are starting to feel slightly uncertain about that. And uncomfortable with the fact that taxes are continuing to be pushed forward, and start to look for areas where there's more tax efficiency. And that's one of the great aspects of investing into whiskey.
On the whiskey side, and I guess we'll be seeing again, I'm assuming, from that change in the US government as well, if we're looking in other markets, as you say, looking globally, that change is probably going to be on the end bottle rather than affecting that cask investment side, as far as we know. If we're talking about the T word, the big tariffs.
Yeah, so in terms of tariffs in the US, it's fixed. It's fixed until 2026, mid 2026, right?
Yeah.
So we've got a bit of time behind us. I just think when you look at tariffs in the US, and it's a big thing, right? Trump's looking to put some tariffs in place, that's for sure. But in terms of Scotch whisky, there's a trade-off against American bourbon.
Yes, of course.
So you've got to kind of weigh it up, right? It's not like we're just going to go and tax everything that's coming in from China, because that's going to create X amount, and it's going to build our businesses up in the US. Scotch is an adored product in the US. I mean, I come back from Austin a couple of weeks ago. They absolutely adore the stuff. They love it. So, you know,
Huge
to increase taxes on Scotch or tariffs, it's going to have a really negative effect across the board. And I think the trade-off that has been put into place, I think it's reasonable. You know, it works for both parties. So I'm pretty confident that will roll over. Whether it does or it doesn't, we'll see.
Wait and see.
It's certainly a win-win for both. You know, you tax Scotch, all of a sudden there's going to be a tax on bourbon,
and everybody's unhappy.
You know,
who's
no
winning?
And you know, it's about keeping people happy too, right?
And
whiskey makes
whiskey
people
with
happy.
Exactly.
Absolutely. All right, so looking ahead to the rest of 2025, Ben, what are your eyes on? What are you thinking about? What are you focused on?
I mean, I suppose circling back on company, it's continuing the trend we're on. It's a little bit more about, you know, expansion of the business. We've got projects over in the States which will, you know, throughout this course of this year is now going to start to ramp up into the first quarter of 26. And it's just maintaining what we've been doing. You know, we've had a lot of success over a really prolonged period of time, and you know, for us, it's ensuring that we stay ahead of the curve in terms of what's happening on a global perspective, still maintaining the industry connections that we have and the availability that we have to satisfy clients on all ends of a spectrum from a portfolio perspective, and I think that it's really starting this year and going into the remainder of the year the way we finished last year.
Right.
You know, the sort of the turbulence from the outside perspective has sort of slowed down a wee bit now, and ultimately allows us to then focus on continuing to grow as a company and organisation, and like Tommy mentioned at the very beginning, is increasing the amount we have under management. That's ultimately one of the objectives.
Yep. For 2025. And Tommy, your feelings as we look over the next 12 months?
Looking forward, I always tend to look backwards before I look forwards, right? As we have been. And if we look back into 2024, we had several tariffs and taxes removed from certain nations. I mean, one of the big ones was Hong Kong. Seeing a huge reduction from 100% down to 10%.
Massive.
Which has a massive effect, right? And it shows intent. It shows intent from these nations, whether they want to be in terms of the spirit trade. Hong Kong was a big one for me, because I think when we look back to 2008 and we see the effects of the 80% duty being scrapped on fine wine, it was dramatic, and it happened pretty fast. You know, over a 2-year period, Hong Kong very quickly become the central hub for fine wine trading in Asia. Hong Kong is it's a huge financial district, and it's known as a gateway to Asia. So I think moving forward, I think we can see more of these tariffs reduced. I mean, we're still sitting on an Indian duty, which is 150%.
Still waiting.
Waiting.
And you know, and that was again, maybe I should have mentioned this earlier when you said some of the challenges. You know, that was a process that we've been and something we've been looking at for 2 years. And every 3 months, you think it's going to happen, and it doesn't happen. And you know, that's a challenge, I suppose, in itself, because you speak to clients about it, and then they expect it, and it hasn't happened. And then we've got an election in the UK and an election in India, but it's a huge trade deal.
Yes.
You know, it's very, very different from the fact that, you know, the government in Hong Kong woke up one day and decided they want to remove 100% tariff, and they just remove it. Similar thing happened in Thailand with a 30% tariff. With the trade deal in India, there's lots of moving parts, right? And whiskey's a small part of that, and hopefully
huge potentially
huge upside.
For us in this sector, it's huge, but as you know, it's a small part of that pond. So hopefully this year, I'm looking forward to hearing.
Every 3 months, check it in.
Exactly, the anticipation is the worst bit,
because that will have a dramatic effect.
Of course.
But more so, I think last year we done incredibly well in moving into a certain area in terms of rare and scarce casks, and to continue to build on that. Because if you look over the last year, the amount of distilleries that have released record age statements at record prices, is incredible. You know, and if you actually sit down and you look at those numbers, and you look at the statements that are 5, 10, 15, 20 years before, it becomes impossible to look at the numbers and think, wow, how can I walk away with this from this investment without some kind of return? So I think to focus on those areas, but also to continue to build on young liquid, which was a difficult task in 2024. So just keep building in different areas and to focus on the value too. You know, a big thing for me is to make sure that our clients are getting value on what they buy. And that can be really difficult, because when you get a big name thrown at you,
you just expect it's going to have value.
Well, you just love the distillery.
You love it, you
love the distillery. Everyone knows that distillery. It's very familiar, you know, and people all of a sudden want to jump. And my job is to kind of look at that and make a judgment based on price point. Because it can be the best distillery in the world, but it has to be the right price for our clients and for us as a company. So it's just to continue to work with Stuart and Ben. I think we're doing a good job so far, and I'm always thankful for everything that these guys do for me, and how we help each other. You know, we're a team. We don't just kind of stand on our own 2 feet. We bounce off of each other. We use each other for whatever that may be, and to continue to build that overall figure, because the bigger and higher that number, the more happy Ben is with me. So that's great, right? But then to get back to our clients on that, it's kind of a knock-on effect, right? So as much as we need to look at the overall size of the portfolio we have under management at VCL, you know, that's broken up into many different areas and different parts amongst many different clients. And the only way that we can stay on top of that is by tracking all of those smaller moving parts and making sure that everything's in its right place at the right time. And if it's not, is to get in contact with our clients and make sure that they know what's going on. But generally, it's to stay alive, make sure my children are happy. You know, that's probably the most important thing in my life.
And check your Yahoo News every 3 months on India.
And then after that, I'll worry about Ben and Stuart.
Fantastic, guys. Well, it's been really, really interesting chatting with you both about, you know, what happened in 2024. As you say, it's a pretty tumultuous year generally across the board. Exciting and nerve-wracking in a lot of ways, but also hopefully maybe a little bit more steadiness of 2025. Time will tell. We'll see. But an exciting year ahead as well for you as well.
Thank
you.
For your time.
Thanks so much, guys. Great to have you on the podcast this month. Cheers.